We today, Chris, I know we talked about it this morning. It was one of the accountabilities that Wendy was talking about, that you were talking about, the value versus price. And then you really digging into that. And then me also, I want to talk about some of the pitfalls in that value that people don't realize when they tell you that it's $50. Is it an apples to apples? Are we talking about the same thing, or are we talking about, and I'll use an example and talk about it, but because Wendy texted me, that was one of the days I wasn't in accountability. I was traveling to Columbus, and she said, we got to have a meeting on what Chris is talking about. It really, got her. And by the way, before we all get going, can we all have an applause for a over $10,000 live application while we were actually live today for Miss Wendy Cox? It was pretty amazing to be watching. She was like writing to me. Well, here, Wendy, do you want to share about that for a moment? About your getting all right. Wendy was rattled.
Yes,
You
I
noticed
was.
this.
I'm still emotionally drained from it. Because I joke that writing applications is like a hit. Like you want more of it because you help someone and you're like, oh my gosh, I can do this. But just to put in context, this is a previous client. I have written with him before. That policy is still on the books. He trusts me, and I trusted him to write something like that. Um, just to be perfectly like I shy away from super big applications from sometime, and this is probably going to be part of the conversation, right, Chris? But listen, I don't need all of the accolades and stuff of that. He truly is someone that I've developed a relationship with, and it just comes from focusing on activity instead of outcomes and just doing the consistent work every day, no matter if you want to, no matter if you're bummed out, no matter what. I cannot stress it enough. You have to do enough activity to even give yourself data to know what you need to work on. So if you've done 100 dials and you're getting disappointed, honey, you got to be at 1,000 dials before you can even begin to feel disappointed. And at that point, we're just going to kind of discuss, hey, what do we need to do to get better? And just focus on that. Don't focus on apps. Don't focus on anything. Focus on activity and building your skill set to help people. That I cannot stress it enough. I've done everything wrong in this business and had to grow a whole lot. I'm just further along than you. That's it. That's it. So appreciate
Well,
it.
Wendy, I
It was big.
I want to follow up on what you're saying though for a moment, to kind of get, because this is going to get into the value piece. But the expectations of what we have, like, you have to set up those expectations, and that's like what you're talking about. And Wendy and I were just having this conversation. If you come in here and think that you're going to start making a sale on day one, that just doesn't happen. You have to start making the dials. Look, I've been in sales in some form almost all of my life. If you walk through the door and you have somebody walk through the door of a store and they are standing in front of you, that is a client, but that does not mean that they're going to buy from you. That is still your responsibility at that particular point to be working with that particular customer and helping them and giving them what we always talked about. And that's what Chris is going to talk about today, is what we call features and benefits. What are the benefits that you're going to get from here? It is not just about cost. If you make it about cost, you're going to lose. If you make it about that the sales, for example, and what you dial today, Wendy, I know you can attest to this. We all can. A sale that somebody you talk to today, and 6 months down the road, you write an application. They don't. That's because you're continuing to follow up on somebody that had filled out the application but just wasn't ready at that particular point, but they were starting to sell. But you can't look at today.
Yeah, the
Go ahead.
accidental policy I wrote first thing during dial session this morning was from a lead from March. and we had texted and it fizzled, and I talked about this. I sent mass Mother's Day text messages out because I love using the CRM for that for holidays, and
Mhm.
it just reignited the conversation, and we spoke today and wrote only what we could write for her. She's 36 years old with Huntington disease, so we did an accidental death with Mutual of Omaha for right now. So that's why you have to continue with the follow-ups and build a pipeline. It is a pipeline business. You have to have people constantly to talk to, call back, talk to, call back. You just have to keep filling it up.
Absolutely. I wasn't even thinking about that, you Wendy, but you're right. In talking about this, that's your pipeline, right? That is you building your business. So we've talked about this before. I want to add this, and I want to jump over to Chris so we make sure we get through all of this today. But when you don't look at it as a day, don't look at it as a week. And I'm going to explain why. Look at it as a month as a whole of you starting today, going to work, dialing, and doing the activity. Go back through your report card and accountability and look at yourself in the mirror and say, am I really doing what I'm supposed to be doing? So am I doing what I need to do? And look at it and see how many sales you made. If you look at it every single day and say, okay, well, this was a bad day. And tomorrow you get up and say, this was a bad day. Day 3, guess what? It's going to be a bad day because your mind is in the trash. You have to get up and be positive and in doing all the activity and the things. Then the sales start coming, and then your positive energy starts moving, and then you continue to get better as you move along. All right, Chris, I want to jump into this because I want to make sure we really give you enough time and we really dig into some questions at the end as well. Um, Share with us, Wendy, like I said, she was excited about it and wanted to have a meeting on it about your thoughts on and what we need to be doing as far as value versus price.
Thanks, Sean. I get a little wound up on this topic, so apologies in advance if I'm rattling on. But this is
No,
a big one because this is honestly this is a sticking point for a lot of agents, not just new but experienced. And so we want to, for myself, that's kind of why I do get wound up about it because I've been through this myself. And it's something that causes us as agents to not be as successful as they could be, and a lot of times takes us out of business. And that is trying to sell based on price-based selling. And price-based selling is kind of the mindset that I'm going to get the best, cheapest deal I possibly can for my client, and that's going to be the best for them. And so I've got to say some things today that may kind of ruffle some feathers. I don't know. Somebody may have some strongly held beliefs on this, but stick with me, hang out and listen close because you've got to make the case to you where that selling on price. In fact, I've got a statement that's kind of my motto: you sell on price, you lose on price. If you sell based on the cheapest price, you will struggle with retention, you will struggle with closing, you will struggle with persistency because you're training your client to only look for cheap price. And how that manifests itself is when I say you'll struggle with retention, you'll struggle with closing, you'll struggle with persistency. Persistency meaning business that stays on the book. Somebody will come in and replace you. I don't care if you spent hours and days searching for the cheapest price, somebody will come in and replace you because you train your client that they have to have the absolute cheapest price out there. Now, here's the little inside on insurance. You could absolutely go to all the carriers that we have and you can find the cheapest price, the cheapest product. And you may have actually found the cheapest product on the market, but somebody will come in and replace you. Unfortunately, in our industry, and I wish it wasn't this way, but it's the way of life. In all industries, there are companies, there are systems out there that are not ethical. It is what it is. Any industry deals with it. Any business, any line. So we can all joke about the shady car salesman, but let's face it, there's shady medical device salespeople. There's shady realtors, there's shady, religions, there's shady everything. So there are people out there that will do whatever they have to do to convince your client away from you. So if we train them to buy on price, somebody's going to come in and replace your product. Guarantee it. And so best or lowest price is not always the best for the client, just on that fact alone. We'll talk a little bit about that here in a minute, but I want to set that framework up for you, that if you sell on price, you lose on price. Now you say, well, but I shopped the market. I got them the very best 30-year term at the cheapest price. I could not find anything else out there cheaper. Well, guys, I've been in this business 10 years with Symmetry, about another 4 or 5 years experience beyond that. So, 15 years experience. If I came up to your client, and if I was unethical, now I would not do this. I'm not the kind of person that does that. But if I walked in and you told them that $50 a month was the cheapest that they could get, I will find a way to beat your price, hands down. Now, it may not be, and it probably won't be, an equivalent product. It won't be as good as what they've got. Maybe a lesser company, maybe lesser benefits, but I'll beat it. And I'll tell the client that they have got the best deal out there for the best price. Again, keep in mind, is it ethical? No. Is it best for the client? No, but it will happen. And it will happen because we train the client again that they must get the cheapest price. That's the only way to buy insurance. And so I challenge you, if you have that mindset, and look, I'm like a lot of people here. We grew up in a very lower income, Midwest family. So, you drive across town clipping coupons to try to get the very best deal at the grocery store. You buy you don't buy the Honey Nut Cheerios. You buy the Tastios with the crappy looking mascot on the side of the box. That's what you did. I see some of you laughing because you're like me. We didn't get the Golden Grams. We got the golden something else. I don't know what it was, but it wasn't Golden Grams. And that sucked because Golden Grams were the best. But my point with that is it's conditioning. It's conditioning. It's a conditioning that you have to break out of in this industry, in this business. It's conditioning that's going to prevent you from doing what Wendy just did and wrote a $10,000 case with sitting with one client. Because our money trash, our mental money trash, will keep us from writing cases like that. We'll steer clear of it. But back to why we don't want to sell on price, because we lose on price. Again, what we sell on is value. I came into this business before a lot of you. We're doing this over a screen. We're doing this digitally. A lot of your client conversations are happening over the phone or over a screen. But I had a little bit of an advantage, I feel like, in that I was in home. I was walking up their driveway. I was knocking on the front door. I was walking in. We were sitting down. I got to see their home. I got to see everything that was around. And so how this worked for me in setting up my clients, because I would tell them up front, look, I could sell you, I'm a broker, I could sell you the cheapest product out there. I'm not going to. I just told them that up front. And they would look at me a little stunned. And I'd say, I'm not going to sell you the cheapest product out there. It might wind up being the cheapest product, but probably not, because cheapest is not always best. And I would use this analogy. I would say, when you bought your car, did you get the cheapest car that you could? Oh, yeah. I got a great price on it. Absolutely. I shopped around. I found the best price. I said, yeah, I get that. But does your car have rubber floors, crank windows, no AC, no radio, vinyl seats? And they start laughing. They're like, no. I said, no. You got leather seats, right? You got leather heated seats, probably even got a heated steering wheel. Like, you got Sirius XM on your radar. They would laugh. Yeah. I got all that. I said, so what you got was the best value for that model. You shopped around, got the best value, but you didn't get the cheapest thing, because you get the cheapest thing. Honestly, you're not going to enjoy your ride to work, are you? And again, they chuckle and they laugh. They're like, no, you're right. I said, we don't buy cheap things unless it's something that we don't value, that's not important to us. So when we're talking about insurance, we don't want people buying cheap. Cheap is bad. Cheap means the only way you get cheap in insurance is you take away value. Because keep in mind, in our industry, our products are heavily regulated. So when a company builds a product, they have to submit it to the Department of Insurance for approval. That includes pricing. Okay, so when a company comes out with a product and pricing, there's a lot of factors that go into it. We're not going to break it all down today, but the company's claims paying ability that goes into that, making sure they're bringing in enough premium to offset their death claims. I mean, it's a long, drawn out process to get products approved. In fact, you've heard, I think, on the national call last week or the week before, they finally got a product approved in California that had been approved months, maybe a year or two earlier in other states, because it went through an extra scrutiny in that state. Point being is one company can't come out with a 30-year term that is going to save a client at the same age, same product, that's going to save them $50 a month. In other words, it's going to be 50% of every other company out there. That just doesn't happen. Because the only way to do that is to take away value. Now, they can do that by maybe removing some things like, living benefits, removing some of the add-ons that other companies put in. But keep in mind, now we're talking about not a change in price, we're talking about a change in value. So when you're having conversations with clients, and guys, I get this because I went through this. I did the whole sell on price thing and lose on price thing. Most of us have gone through a phase in our business where we had trouble with persistency, we had trouble with retention, we even had trouble with closing. Because again, here's where this comes in. You tell people, I'm going to shop the market, I'm going to get you the cheapest thing out there. In the back of their mind, yeah, but what if? What if there's something else cheaper? I probably ought to talk to 3 or 4 other agents. Well, guess what? They're going to talk to another agent, again, who's from another company that's not ethical, that doesn't have a good sales system, that's going to figure out a way to beat your price. I don't care what they have to do. They will beat it. And you're going to call them back a week later. Hey, let's get back with you. I know you shot the market. You found I've got the best product, right? Nope. Found a better product. It's cheaper. Well, you just trained your client to cut you out of the deal. So don't sell on price, team. And I don't want to beat that too much, but I feel like I kind of have to, because it is something that I see too many times in our industry. We sell on value. So and to expand that, we sell on what's right for the client. So that needs analysis form, you could either use the one that's in funnel. You can go to HQ, download one. If you're the old school like me, you like to write it out on paper. Those discovery forms are golden because it helps us build what's right for the client. And again, you guys, try this. Tell your client up front, hey, I'm a broker. I could get you the cheapest thing out there, but I'm not going to, because that is not always the right thing. Cheap is not the best. You train your clients on that, and you'll be surprised the level of trust that they give you. Because you're number one, they're conditioned that salespeople are going to say whatever they need to say to get the business. Well, if you tell them up front, hey, I'm not the cheapest person out there, but there's a reason. Well, that subconsciously builds a little bit of trust, because they're expecting somebody to come in and say, hey, I can undercut everybody else in the game. You ever just told them, I'm not going to be that person. I'm going to do what's right for you. I'm going to put together a plan that's going to be most beneficial for you and what you need. That's going to fit your family, fit your needs, and pair you up with a company that's going to be there when you need it most. And that's huge in this business. Guys, what we overlook too many times is the back end of our process. When they need that company, and it's not just claims paying ability, because that's heavily regulated. Most of the companies we deal with are good at claims paying. The dirty little secret is not every insurance company that we work with has a good back-end service process. And I know this firsthand, because again, I've been with this company 10 years. I've got policies with most of our core carriers. In fact, I have to look, I think I've got policy with all our core carriers. And I can tell you from personal experience, some of them are really good customer service on the back end. Some of them absolutely are terrible on the back end. So, again, just a little tidbit there for when we're thinking about what's best for the client. There are a lot of factors that go into this, and it's please, please, please do not make price the number one. In fact, it shouldn't even be in the conversation. Sean, I'll pause there. I know I'm kind of rambling a little bit. I feel like I'm getting off a little bit off the rails here, but I'll open it back up for you or anybody else that has any questions around this.
Well, here, I'm gonna change that view now for you and I both. So one of the things, Chris, I love the example of you. That's a really good example. And I want to talk about a couple things that I think I'd like to kind of have you follow up on one of the things that I've noticed and talk about those. But I love your example of the vehicle. I mean, that's really good in talking about, we don't want to go out and just get, okay, well, I'm trying to shop for the cheapest car. We don't want the cheapest car. We want the best car for the best value. I really, really like that analogy and think about it. So there are two things that we talk about when we're talking about, like if I've talked to somebody before in the past, we need to talk about apples to apples. First of all, now you're talking about value, but if someone comes along and they're talking about, well, I got this particular price, and I'm going to have two different things, and I'm going to have you follow up on each one of them with me, Chris. Is, for example, well, I got $100,000 for $30 a month. Okay, well, you probably number one saw that ad, and that's for somebody that's 21. Not somebody that is 65 years old. But the other thing that's important to talk about, and I've run into this a few times today, and recently, and Wendy and I have been talking about this, where you were just talking about some agents that are unethical. Well, they're getting a cheap price. Let's say they get a cheap price, and they've got that 100,000. And it's us explaining to people that these are possibilities, that these are things going on, so that if they are looking at the price, they understand. So $5,000 is guaranteed to pay out no matter the cause of death. I've run into this a couple times now. But 95,000 or 95,000 of it is accidental. But they don't explain that to them, that 95,000 is accidental and 5,000 no matter the cause of death. So you'll have people call you back after you've educated them. The other part of this value is education. Listen, I have all of these carriers, and I'm here to work for you. Make me your psychiatrist or your attorney. You need to tell me so I can help you, but I'm going to work for you, not for the carrier, to be able to help you. But I need to educate you on things you're going to run into, pitfalls you're going to run into I know you're probably looking at somebody else. We all know you're probably shopping, but let's make sure that you're getting what you actually think you're getting. So $5,000 is no matter the cause of death. I had a guy call me back and say, Sean, that's actually how it is. Chris, why don't I have you just kind of follow up on that particular piece, and I have a couple other things to pull apart as well.
I love that. And that's a great topic because, again, one of the things that I think too many people fall into the trap of is becoming order takers and not professionals. And so somebody comes to you and says, oh, I want $100,000. And I've got a quotes from 5 other companies. So the knee-jerk reaction is, okay, well, they've got 5 other companies, so I got 5 competitors. I need to come up with a $100,000 quote that's going to beat those 5 competitors. Pump the brakes. Mm-hmm. Why do you need $100,000? I'm curious. How did we come up with that number? See, professionals first look at the totality of the client that we're working with, and we start asking questions. We get curious about them and their life. They may be thinking they need $100,000 because, they earn, $50,000, and in their mind, that's 2 years worth of income, and that's all I need. And, or that sounds like a lot of money. You'd be surprised how many people we talk to that, $100,000 sounds like a lot of money. Until we start asking them some questions. Well, tell me a little bit about your life. Do you own your home? Oh, yeah, I own my home. Do you have a mortgage? Yeah, I've got a mortgage. How much is your mortgage? $350,000. Oh, interesting. $350,000. Do you have mortgage protection on that? Well, what's mortgage protection? Well, that pays off the mortgage in the event that you die or become disabled. No, I guess I don't have that. Interesting. So who pays for the $350,000 after you're gone? Like I said, we opened up a completely new conversation. Now they're no longer focused on the 5 quotes for $100,000. Now we're starting to go down a discovery path with them, where we start asking them, so tell me, do you have any family? Do you have kids at home? Yeah, I've got 3 kids. How old are they? 5, 7, and 9. Interesting. 5, 7, and 9. Okay. So they're going to be at home for a while, it sounds like. I mean, you're not kicking them out anytime soon. Oh, no, 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 no. They're 18 or 25 or 30. I'm not sure. Yep. Yep. So what happens after your income is gone? What are they doing? So too many times I see this a lot of times with agents. We become order takers. We become reactionary. Client calls up, even with our lead system. And look, our lead system is set up. Keep in mind what a lead system is designed to do is to bring somebody in who has expressed some level of interest. Too many times we take that is the paper says this, or the screen says this, or the questionnaire says this. This is what I've got to do. So they fill out a form that says I want $200,000 worth of death benefit. We're going after $200,000 worth of death benefit. No, no. The lead form is designed to open up the conversation. It's designed to get them thinking. They set the benchmark at 200,000, but 200,000 is not where we're going to land if we're doing our job right. And when we set that up with a client, look, I mean, I know you're requesting 200,000, but do you mind if we go through and I ask you a few questions? Some clients find they don't need that much insurance. They may have enough, and I could save you some money. If you want to go down the save you money avenue, some people think they need 200,000, and really, when we kind of get into it, they actually don't need that much, or maybe they need a little bit more. But there are ways to do that where it actually doesn't cost you anymore. Can I ask you a few questions? Then what are we getting into? Who do you owe money to? What's your family look like? How much are they going to need when you're gone? Like we're doing a professional's job of helping the client sort through their financial situation and find out what they really need. So as a professional, we can come back to them and recommend a product or solution set that's going to fit their need. And if you're doing this properly, tying it in with their why. Why is this important to you? Who's impacted? How are they impacted? What does life look like after you're gone? Trust me, they will forget about any quote that they have gotten on any other policy. They will now be looking at you and say, okay, well, how do I fix this? What do we need to do? And that's where you get to a level as a salesperson where you're performing at a different level than the 5 people who just threw a quote at them, hoping that they would sign up with them that day. Because if you give somebody $100,000 quote when they need $500,000 of coverage, you have not done that person a service. You maybe helped them a little bit, but you really haven't in the long run. In fact, you've probably hurt them because in their mind, they're going to stop looking because they've taken care of their need, air quotes. They've taken care of it. But you stopped them in their tracks when they actually needed to go down that path further and deeper. And it's your responsibility as a financial professional to help them understand that process, to guide them through that. So do not take orders. You will help guide them. You're the Sherpa that's going to guide them through this journey. Build that kind of relationship, and trust me, your cases that you write will be bigger and stickier than anybody else who's out there quoting, just throwing quotes.
Love it, Chris. I do. It's back to the value and what you're talking about, and us being a professional, right? Like you said, not being an order taker. All right, I'm going to run into the next thing. So we talked a little bit about the pitfall of it being 5,000 guaranteed to pay out and 95,000, right? Accidental, and then not telling them. Here's another little bit of a pitfall that I like to talk about, and then we can go on to the next piece here is, for example, and we run into this. I've even run into this from people that I know. And that pitfall is being reevaluated in a year, being reevaluated in 5 years. When we write an application on someone and let's say it's a final expense or it's an IUL or it's a 20-year term. That 20-year term is for 20 years. You have a heart attack in 6 months, you're still covered with that coverage for the next 19 and a half years if you live through that heart attack or that stroke. If you are with a lot of different carriers, they are going to give you a great rate back on value versus price. But then in a year, you're going to be reevaluated. So let's say in 6 months, now you have that heart attack. And the year comes, and on your record is a heart attack. Now they're going to either raise your rate so high that you can't afford it, or they're not going to give you a policy at all because you weren't locked in on a price. So they're going to give you an inexpensive price. My thing is letting people know that when you're working with other carriers as well as working with ourselves and building the value in what we do is also about the pitfalls they're going to run into in the unethical agents that are pulling this stuff and not telling you the fact that you're being reevaluated in a year. They will start asking questions. The question is, am I really going to get a full 100,000? The question is, am I going to be reevaluated in a year and then I can't get covered anymore? This is us educating our people. Chris, I want to throw this other thing out here, and this is back into the features and benefits and the value in each policy. The other piece is, are you getting what you're getting from us? Meaning, when I'm working with you and I'm writing on this particular application, are you getting living benefits? Are you going to have it if you have a heart attack or a stroke? And now I'm going to be able to help you while you're still living and not just when you pass away, where you're looking at this other item over here that you might get 100,000, that you might be reevaluated, and do you have living benefits? And it's selling and putting all those things out there for them to understand what they're really getting, back to the value of it. Chris, do you want to follow up on that particular piece?
Yeah, in fact, that it's interesting. And this again goes back to the unethical agent. My first year in business, again, this was in person, but this is duplicatable. This is replicatable because I ran into a lady, who I sit down with her. She'd filled out a form, mortgage protection. She's like, well, I really don't think I need this. I've got $100,000 for, and I forget what this, it was like, $60-70 a month, something like that. I'm just kind of pulling a number off the top of my head. But that struck me as unusual because she was in her upper 60s. And I was like, oh, those numbers don't jive. And I said, do you happen to have that policy here? Do you mind if I take a look at that? And she brought it out and looked at it. And she said, well, it's good. It's a good policy. It's locked in. It's level. And so I flipped it over to the declarations page, and it was locked in. It was level for 5 years, and did a premium reset. And I said, so can you look at here, Riff? I pointed to the page. I said, you see this in year 5? I said, you're right. It is locked in. I said, in year 6, it's no longer locked in. This policy resets every 5 years. And in 5 years, it's going to triple its premium. And I said, when that premium triples, are you going to be able to afford that? And she about fell out of her chair. She was stunned. And she said, no. And I said, you may not be aware of this, but in 5 years, you're going to be 73. And when you can't afford that, you're going to drop that policy, but you're going to go out and try to replace it. And when you try to replace it, everything that you were looking at before is now 5 years more expensive than it was when you looked this year. So those plans that you passed up are all now going to be that were locked in, truly locked in for life, are now all going to be 5 years more expensive. So long story short, she went from $100,000 policy, or 150, I forget what the number was, to a $25,000 policy with me, and spent more money with me. Why? Because she got a better value. She got a policy that was a whole life policy that was locked in for life at that premium, and she understood the value. Now, I could have played the game. Oh, you got it for $75 a month. Well, let me see if I can get that to you for less. And if I were super unethical, I probably could have sold her an accidental death policy for $35 a month, told her it was the same thing that she's got, and walked away with the sale. But that's not what we do. We take care of clients and we do the right thing even when nobody's looking. That's part of our core values. So when I took the time to educate her on what she had and we walked through that, not only did she spend more money with me, but she bought a policy that at the time had less face value than what she currently had. But it made sense to her because, I mean, in 5 years, it was going to be a policy she wouldn't keep anyway.
Absolutely. I mean, it's. I didn't even know that story, but yeah, I mean, it is. It's going back to, like you said, that 5 years. And a lot of people, like her saying she's surprised, they just have no idea because the agent that wrote it does not tell them. And that's about us educating them and understanding what you already have or what it is that we can get for you, and let us take a look at it. Because of all the carriers, it's going back to us saying we're working for you, not for, we don't just have one carrier and can only write you one thing. James, I know you and I talked about this. We can go there, right? Like, now you've got all of this to be able to sell. You're not just with one company. You can help somebody, but it's about educating them. Chris, I want to go into the thing where we hear it all the time, especially on the mortgage and protection side, about, well, I have that at work. I already have that. I've got the coverage. Well, I want to say this, and then I'm going to let you follow up on it. But what a lot of people don't understand is, let's say you're working that job and you have that insurance. Great. Then you get sick and you got to leave the job. And then all at once you can't go back to the job. And the job is gone. What goes along with the job? The life insurance does. So now you're sick and no life insurance. So now you're getting on the phone to try to be able to get life insurance, and you can't. Chris, do you want to kind of follow up on that particular piece? I know you've experienced it a whole lot more than I have.
Yeah, that's and actually I'm going to even back up just a second because you hit something that's another hot button that I want to touch on real briefly before we dive into this.
Yeah.
And that is we have a lot of options here. We really do. I'm going to challenge and encourage every one of you to pick one or two companies and become specialists in those companies and in their products.
Yeah.
I mean, it's great that we have the companies and great that we have options when they're needed, but we have too many agents are spreading their business across 6, 7, 8, 9 companies instead of focusing on one or two and trying to silo your business into those. What that does for you is a couple things. Number one, you get to know those products forward and backward, inside and out. A lot of your top writers, the names that you see at the top of the leaderboards, write 1, 2, 3 companies max. They occasionally will go out when they're forced to, but they don't write a lot of other companies because you get so good at those companies. But also, again, when we sell on value instead of price, when you get really good with a company that you like, that you're able to do business with, you've got a good interaction with the company, the back office. Every time you ask them for something, they're jumping in, they're taking care of, they're helping you with that. If they're going to treat you like that, they're probably going to treat your client like that. That's a good experience for that client as well. So just a little side note. One of the things that I would really, especially for our new agents coming in, let's pick one or two of those core companies, become super fans of those companies. In fact, consider yourself an employee of that company and that company alone. Write everything in those companies. And I've got top producers on our team still to this day that write 90% of their business with one or two companies. And I know company wide that's the same. So,
Yep.
but to your point, the work insurance, guys, keep in mind what work insurance is. It's just a benefit that the company throw out as just an add-on. Again, they're competing with other companies. Work insurance, I always tell clients, hey, that's great. If they allow you to buy more, please buy more. I don't discourage them. I tell them it's a great thing. Get as much as you possibly can. If they offer, get more, because I can't compete with it. You will get it cheaper there than you can from me. Again, I'm going to just acknowledge up front that it's a cheaper policy, but then I'm going to turn around and explain why it's cheaper. The reason why it's cheaper is Do you know how many times work policies pay out a death claim? It's less than term. Term is 2%. So if you think about all the term insurance that we sell and that every company in the US sells, less than 2% ever pay a death claim. So less than that of work policies ever pay a death claim. So what kind of odds do you have of your term policy being there for you? It's not because they're not there, won't pay. It's, you got to understand, you got to die when you're there or when you're employed with that company. And if you're not employed with that company, they're not going to pay. So like you leave that company, whether by your own choice or they choose for you, you no longer have that coverage. So I tell clients, yeah, absolutely. Love work coverage. Get more if they offer it. Like double down, triple down, whatever they give you. But the reality is, again, here as professionals, most work policies do 1 to 2 years of income. So you've got a client making $70,000 a year. If you look at the work policy, it's probably going to be anywhere from $70,000 to $140,000 a year, or $140,000 death benefit. 1 to 2 years. So that's an easy conversation to point that out. Okay, so you make $70,000 a year. You have $140,000. So if you die tomorrow, your $70,000 is not coming in. Your family has $140,000, but that's basically 2 years worth of your income. What happens in year 3? We got to be willing to ask that question because, again, nobody takes the time to ask that question. And for a lot of people, that's a brick in the forehead because nobody has ever asked them that. And that's when you get silence on the other end. People stop and they've never thought about that. And it is, it's kind of a shocking moment for them. We just had, I don't see her on the call today, but we had, we had a reset the other day. I asked a client a question and he chuckled and he said, you know what? I never thought about that. I never thought about that. So Maria, I was on with Maria and one of her clients. And so, I said, so what happens when you retire? So it's the same question, but just in a different context. What happens when you retire? That income goes away. Now, in my mind, it seems like an obvious question. He had never processed through that, oh, wait a minute, that income that I get every 2 weeks is not going to be coming in. Now how am I going to replace that? So same question. So your work policy is a great policy, but once your income stops, you've got a year's worth of death benefit, income replacement. You've got 2 years. I don't care if they have 5 years. I'll still take that and make it not enough. Because a little side note, what I want us to all get in the mindset. Most people we talk to have coverage of some kind. We're very rarely do we talk to somebody who's uninsured. It does happen. I shouldn't say rarely, but most of the people we talk to have something in place, whether it be work insurance, maybe a couple policies as they've bought over the years. Most people have some insurance. I would hazard a guess, and I don't know this statistically speaking, but of the leads that we get in, I would say 97% of the people that we talk to don't have enough insurance. They are grossly underinsured. That's the gap that we're trying to fill. So if you get on with somebody and says, I have insurance, great. I'm glad you do. Let's talk about that. Because as a professional, our job is not to identify whether or not they have insurance and whether I can sell them another policy. Our job is to identify what's the gap between what they have and what they need, and how can we fill that gap. That's what a professional does. A salesperson or an order taker says, oh, you want 100,000? Let me get your quote on that, and let's see if we can get that written up today. That's not selling. That's not even doing the client justice. We have to fill the gap. We have to find the gap and fill the gap as best we can. And a lot of times that's going to be a multi-phased approach. Maybe writing a little bit of base policy with some accidental death benefit, maybe a lot of accidental death benefit if they got a tight budget. I realize budget is a concern. So for those of you who say, well, yes, but they only have X amount of dollars a month. Yeah, I get that. But let's do our job first, and then we figure out how to solve that gap filling. on the back end. And we can do that. There can be a combination of policies. It doesn't have to be one, one product or service. In fact, most cases, our best writers are writing 2 or 3 apps in the household on the primary insured.
That's a good follow up, Chris, as far as back to the value. You're given the value again. And I think with you talking about that, I want to bring up something that we have to run into an awful lot in the value piece. And that's somebody that has a $200,000 home, is 71 years old, and has a $200,000 mortgage that we're trying to cover. And it's us talking about the value with the critical period and being able to get in there and being able to explain that to people. What's the best way that you would say to everybody that you would explain a critical period to somebody, for somebody that is expecting to try to cover a $200,000 or a $300,000 home at 71 years old?
Love critical period. I lived off critical period when I was running full time in the field as a new agent coming into this business. Critical period, for those of you who are brand new, don't know what that terminology is. It's just a marketing term, for lack of a better word. That critical period is not a specific policy. So if you're looking in the catalog and you can't find a critical period policy, don't panic. It's not there. What critical period is a sales concept that says when a client dies, and more often than not, it's a elderly client or a client that's older, maybe retired, that when they die, we need to be able to pay their mortgage for that critical period of time after their death. Period of time when most financial planners and funeral planners will tell the family not to make any big decisions for the next 6 months. That's like standard advice. Don't make any big moves for 6 months because emotionally, mentally, you're not in the right space to be making those kind of decisions. And that's when people make huge mistakes financially and from a planning standpoint. So what we're going to do is design a policy that's going to pay the mortgage for that critical period of time, that's going to get their family through that so they can make some decisions about the house. Most likely selling that house, but also having a little bit of time to fix it up, to market it, to clean it out, to make sure it's ready to show, so they don't have to have a fire sale. They can get the very most for that property. Now, and the reason why that's a good value for the client, number one, guys, write this down. So typically with mortgage protection, 50 and under, we're going to write some type of term mortgage protection plan. That's kind of standard, unless their health is super bad. I mean, that's 50 and under, most likely is going to go term because of the rates. 60 and over, do not write term. Almost never. That's like a 1% time that you'll write term on somebody who's over 60. So if you're thinking that way, get that out of your head. And we'll get back to that here in a second. 60 plus, don't write term. Okay. There are some very, very limited cases where it makes sense. And we can talk about that if we have time, but usually it doesn't. 50 to 60 is a really kind of a gray area. It could break either way. I tend to lean more critical period for that age bracket, but you get somebody in their lower 50s, it still makes sense sometimes to still look at a term product, because the rates are starting to climb pretty fast, but maybe still affordable enough if their mortgage is low enough and their health is good enough. But 60 plus is almost by default, in my mind, a critical period. So again, what critical period is designed is to pay their mortgage for that critical period of time. So let's take a client that's got a $2,000 a month mortgage. And what we want to design is a plan that's going to pay that mortgage for 6, 18, or 24 months. That's the most common time frame that we're looking at. So it's $2,000 a month for 6 months. That's a $12,000 death benefit. 12. Let's see. What did I say? 6 months. So 6 months, 12 months is going to be $24,000. Okay. So obviously, but the reason why that's important, a lot of times, think about the clients that we're talking with that are 60 plus. usually are retired, usually don't have any dependents at home. Uh, this works exceptionally well for single retirees, but even works for married retirees. But let's talk about our single person. We've got a 69-year-old retired female, no husband. Husband's already passed. She has a home. She has a mortgage, and she's wanting mortgage protection. And, I would say to her in that particular case, Mrs. Johnson, if you pass away, who gets your home? Well, my kids are going to get my home. Okay, great, great. Your kids are going to get the home. Do they live with you? Do any of your kids live with you? No, 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 no. They've got their own houses. All right, perfect. And sometimes this is a good question. Do they live locally or are they out of town? A lot of times they're out of town, which further is going to make our case worse when we get to putting a proposal together for Mrs. Johnson. Okay, so your kids don't live with you; they live out of town. When you're gone, are they going to keep the house or are they going to sell it? Well, they'll probably sell it. They'll probably sell it, get the equity. Yeah, okay. So you owe $100,000 on this home, but it's worth 350. I mean, that's pretty good equity. That's a pretty nice nest egg you're leaving your kids, right? Oh yeah, yeah, yeah. I want to make sure that they have that money. Great. Well, Mrs. Johnson, I mean, here's the thing. I could sell you a mortgage protection plan that would pay off the mortgage, but to be honest with you, when I give you the price, you're going to hang up on me, and that's going to hurt my feelings. And she'll laugh. You should, always joke with your clients, guys. If you can get them laughing, that's you're 80% of the way towards making a client. So I say, you're gonna hang up with me. You're gonna be mad at me, and you're gonna hang up. She's like, oh, what are you talking about? No, I can't sell you I can't sell you a full mortgage protection plan, but to be honest with you, it's not what you need. So again, here's where we become an advisor, not an order taker. What clients in your position do that I work with, that are clients of mine, what we do is we put in place what's called a critical period plan. What it does is it pays the mortgage for a period of time to make sure that your family has time to get your house ready to sell once you're gone. And so, and you get to choose that. If it's 6 months, if it's 9 months, if it's 12 months, I'll give you some options and you pick the one that makes the most sense to you. If houses are selling fast in your area, I'm going to recommend you maybe do 6, 9 months at the most. If it takes a little longer, maybe go 12 months, 18 months. But again, it's going to be up to you and your budget. So guys, at that particular time, what we're doing is we're trying to avoid a situation where we're going to quote the client a $250 a month premium or more on a product that's probably going to be a 10-year term that she's probably going to struggle to get qualified for because, like most 69-year-olds, she's got a basket of medicines hidden under her cabinet that she's not telling you all the story about. And in the odds of her qualifying for that plan, even if she does qualify for it, again, it's not going to be a good value for her because she's paying a lot of money for a policy that's going to go away in 10 years. And then all that money she's paid in, she has nothing. Whereas if I set her up with a critical period plan, which is a final expense whole life, this is just between you and me, it's a final expense whole life. But what it does is it is a death benefit that is going to pay that mortgage for that period of time. And when I set these up, guys, I take whatever the mortgage amount is. So I use the example of 2000, but if it is $1,763, I take $1,763 and I take it times 6 months to come up with my death benefit, because I never want to present it as, well, this is a life insurance for $12,437. What I'm going to say is this is your critical period plan that is going to pay your mortgage for the next 6 months, for that 1763, so your family doesn't have to come out of pocket. So for the next 6 months, that mortgage is on autopilot. And it clicks. It makes sense. If you try to sell it to them as a life insurance for $1,000 or for $12,763, they will reject it every time. If you say this is a 6 months critical period plan that's going to pay your mortgage for the next 6 months and make sure your family doesn't have to come out of pocket, guys, we're solving problems. So make sure you position your solution to take care of their problem. Does it make sense? Questions on that? Critical period sometimes trips some folks up.
The good part is you're given the value again, Chris. So yeah, I think if we can go into a few questions, if anybody's got any questions in here, but that's it. You're like you just said, and one of the things that some people don't think about once in a while is that like you're explaining it to them about that time frame of that 6 months, not about the fact that it's coverage of 12,000. I love that in the critical period piece. That's great. Does anybody have any questions for Chris about that? No questions. Man, Chris, I'm telling you, you're getting good at explaining everything. I don't even have any questions. You're
I
going through all.
do.
Oh, okay. Lisa, go right
I'm the
ahead.
question queen. Um, do you find that sometimes people want help with like extra fees for selling a house, things like that too, and to like pad into that? Um,
Yeah.
or like
Yeah, you
pack them
absolutely
up
can.
and things like that. And you just say, okay, that's part of you just add to that amount, still part of that critical period. That's how you would still explain it.
Yeah, 100%. And that's I love your question because that goes to good discovery. So if you're having good discovery with a client, talking about selling the house, say, is the house ready for sale? Do you think they'll need to bring in anybody to help kind of maybe paint, do some touch up on the property, move some stuff out?
Mentioned the fixing it up, and that's what triggered that thought.
Yeah. Yeah, 100%. And so, so for some clients, you guys pay attention to what their motivation is. Some clients it's just I want to make sure that my family doesn't come out of pocket for the monthly mortgage payment until the house is sold. That's it. They could care less about anything else. Some and again kind of go to for those of us who are listening to the national call and they're talking about five voices and the training on that. This is a good training for you. We talk a lot about it in leadership. This is good for training in dealing with clients because you're going to hear those nurturers are going to be the ones that say, well, I want to make sure that the mortgage is taken care of, that the house is cleaned out, that they don't have like their travel's paid for. They live out of state. So they're traveling here back and forth to meet with the realtor that they got to come for closing. Yeah, no, I understand that. How much do you think it would be we want as a cushion to make sure that we're paying for all those extra expenses? Guys, let them set that number. So we may have a $24,000 death benefit for the critical period to pay the mortgage for the next 12 months. But they may throw on an extra $10,000 just because they want to make sure that their family doesn't come out of pocket for a penny. And that's great. We're going to solve that problem for them. Absolutely. So this is what this critical period plan is going to do is going to pay your mortgage and pay for your kids travel back and forth and clean the house, paint the house, yada, yada, yada.
Love it.
Yeah, great question.
Great question. And the thing that's good about that, Marisa, is that's what the whole point is, and that's what Chris is talking about the value and us being their advocate. So think about it for a moment. If you didn't think about yourself being in sales, but you're advocating for that particular client and doing the right thing by them. We talk about it all the time. If you're not doing sales, but you're doing and helping them find the best thing for them, and then you focus on that, the rest of it will all come. That's the thing, and it's finding that value and it's asking questions to be able to do that. I know we're coming up against the top of the hour. Chris, is there anything else that you want to add as far as the value piece is concerned? I think I've got through all of my questions I wanted to ask today.
Yeah. Big piece. I think too many people think training is going in, learning about the companies, learning about the products. Guys, it's learning about communication. Whether it be Five Voices, there's some great training programs. Obviously, Jeremy Miner, some of us have been exposed to that training. Be tapping into those videos. I went through training years ago, and it's still a very, very good training, still available in a lot of areas, called Sandler, which is actually where Jeremy Miner pulled his material from. But Sandler sales training. There's some great stuff out there from, I mean, Cody Askins does a lot of interviews, posts a lot of stuff up. What I want to share with you, though, is the professionals are the ones that get good at the client interaction piece and uncovering those gaps. and doing so with posture and with authority. So you will never educate a client into buying a product from you by taking a policy and, flipping it open and starting from the front and reading to the very back. And this gives you living benefits. This gives you this gives you that. Don't get me wrong. I will reference that stuff, but to be honest with you, I don't know how many clients I've written as we're filling out the application. They give me their bank information. They say, oh, by the way, what's the company name I'm going to see coming out on the draft? We never talked about the company, guys. I solved their problem.
Mm-hmm.
And we're doing an application. They're giving me all their personal information. They're filling out their banking information. Oh, by the way, what company should I be looking for? Oh, yeah. Sorry, I should have mentioned that. Mutual of Omaha is going to be the company that's doing, and again, I'm going right back to, this is the company that's providing your critical period plan that's going to pay your mortgage for the next 6 months so your kids don't have to worry about that.
Right. I love that, Chris. Chris, because you brought that piece up, you obviously all have HQ. There is a Jeremy Miner training on sales. If you go into your HQ, it's already in there. If you go into your HQ, step 1, step 2, go to your sales training. Step 3, go to your calls and webinars. Scroll to the very bottom of that page, and you will see an 8-week training that is in there for Jeremy Miner training. That is right in there for what Chris is talking about. That there are the plethora of information inside HQ, but that would be something to take a look at as far as being able to learn value and what Chris is talking about with being able to sell. Good
with
call.
Any of that, John, just to kind of tie a bow on that. With any of that, whether you go through Jeremy Miner, whether you go through Chris Leak, which we obviously advise everybody to go through Chris Leak training because it's specific to our system. Great program. Sandler training, any of the other, I'm trying to think off the top of my head. Even some of the classics, Tommy Hopkins, those are an old throwback for some of us been around for a while. But any training that you go through, the key with that is to treat it like a sport, and where you're learning it, but you're practicing it.
Yeah.
And every day you're getting up, you're running reps, you're getting a piece of your script, scripting. Maybe you want to talk about the appointment setting process. Maybe you want to talk about presenting critical period. Maybe you want to be talking about closing, like wherever you need to work on. You've got to practice that. That's the big piece I think too many people miss, is they spend too much time on company and products and not enough time on the client interaction piece. I've said all along, I will continue to say this: if you do nothing else right about our sales process other than have a good why conversation. Why did you fill this out? Who is this for? How are they impacted if you don't have this? What does life look like after your income is gone? If you do that part right and nothing else, you'll be very, very successful in this business. You will make more money than most people can even dream.
Well, what I want to add to that, Chris, is, for example, when being in the dial rooms and listening, like, for example, Wendy today making that sale and being in there making that sale and being able to experience and listen to her, being able to listen to Wendy or anybody else that's really good at selling, that they're doing the shift when someone won't answer the phone, or they say, I've already got that taken care of. Listen to her cadence, because that's what you're saying, is getting in there and listening and then dialing yourself and being able to use that particular piece, and then being able to go into the why and being able to get into building the value. But get in and be part of it. Being engaged is just such an important piece as well. So if you're not getting in there, I see a lot of faces that were in there today. There were 9 of us that were in there today. Let's continue to make that bigger and bigger so that we're continuing to learn and sell together. So anything, last word, Chris?
All good. hopefully we provide some value for folks.
Absolutely. Good call. Brian has recorded it. Wendy's already requested it for a couple people that couldn't make it in. She said I was listening, and she said a lot of people need to be listening to this about what the value is, and we'll continue to dig into that a little bit more. Appreciate everybody coming in today. We will see you in the live dial room tomorrow, and also see everybody in accountability in the morning. Appreciate you all. Everybody have a great day.